Hello, hello, hello. How is everyone doing? Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Iaccino, who again is actually here. He is here. The man is in the house. Let me get this. Let me get see if we can get this. Oh, there we go. Oh, well, you actually have to share the screen with me.
For a minute there, I thought you were wearing full black, which would make me proud.
It's a blue and black combo. I'm black and blue from today's
You're
markets.
black
Black
and
and
blue.
blue.
Your heart is black and blue.
Oh boy, here, hold up. Well, see now, since Bob is here, we got to start it off right. We got to get to subscribe. If you're not already a subscriber, please consider subscribing, ringing the bell, which is very important, so you know when Bob's on the live stream, and hitting that like button. Don't hit the dislike button when Bob's around. Do not do that. All
Actually,
right.
I'd like to see that ratio. That would be funny.
They stop the ratios. You can't see how many dislikes there are,
Oh,
which
come
is
on.
so bumming to me because I used to know, especially in the company that should not be named, when I said something people didn't like, the dislikes went through the roof, and now I can't see them.
You should just change the name of the company to the symbol and see if that gets you demonetized, like Prince.
So, okay, let me see if I can get us all here. Hold on, I gotta now try to get this. There we go. We're down the corner. Bob's on the right hand side because Bob's always right. And
Be flexible.
all right. Let's see what some comments are. Wavy. Then we'll get to Bob. Hello, Wavy. Williams says, "What a day." Ah, yes, your baby Boeing. Boeing is that double bottom. It's in our portfolio. Nasdaq can't seem to catch a break. Let's see. Aloha, Kalani. Hello, Bob. Welcome, welcome. Russia invading Ukraine, but Boeing is still going.
They're using Boeing planes to help do it, I think.
Yeah, let's see. Let's see. Nasdaq is getting closer and closer to the 200-day moving average. Let me pull up the Nasdaq real quick. It's got a little way to go. 200 is about 14,965. So we could probably see it tomorrow based off this.
Yeah, if it
Uh,
keeps up like this.
uh, Bob Vincino, Bob Iaccino. Vincino, is that wine? The Bob of wine.
It rhymes with cappuccino,
Yes, I did introduce you in the past on some other ones as Bob's Cappuccino.
which is
So,
my second favorite coffee drink.
hey, Mike and Bob, great to catch you together again. More interactive, yeah, than just boring old me. Hey, Dan, we are in the Dragon's Lair. Let's see. Kalani says, be flexible, prepared for all scenarios, Spec says. Thank you, Mike. Yep, that is what I do. That's why we prepare for the upside and the downside. Sterling's
I
bonds,
tell you
Mooney.
guys, well, while Mike's going through these comments, I'll tell you guys the best thing I ever learned from Mike was the hierarchy of questions. I love that. It kind of diminishes my value in most situations, the hierarchy of questions, but why being the weakest question a trader can ask himself, why is something happening? I believe the strongest one is what, like
What?
what's happening and what does my process tell me to do about it?
Exactly. And then how am I going, then it goes to, first is what, and then the why is just the lowest because you can always go, well, it's what the financial markets do today. They see something happening and then they attribute it to a reason, even if the reason makes no sense.
Yeah, it's like saying, why did I lose $10,000 today? Well, I'll tell you, the Fed said this and Brainerd hearing, and there was weakness in the yields and the dollar's coming off. And oh, it's okay. Did I still lose the money though? Yeah, even though I explained it to you, you still lost the money. So who cares?
And it's what's working, what's not, and what are we going to do about it? That's
Mhm.
so you want to talk about? I mean, real quick, S&P was down 1.39%. Nasdaq down 2.47. The Dow went down. The Dow was the strongest of. That is the hot porridge. Is the Dow 0.48%. Russell only down 0.86. Wow. But dollar index, what was that down?
Yeah, so Nasdaq to me, the Nasdaq futures to me broke key support. I think that was somewhere around 15,665.50, somewhere right around that area, significant level. Somewhere, don't quote me on the level, but somewhere in that general area. And we had broken above it, failed against the rotation zone, and now we closed back below that sort of lower trend line of the, I should say, lower horizontal support of that channel that we've been in since, let's call it March, right? That horizontal channel. And we broke back through there. So that's kind of like a retest of the middle and a break back down. So that tells me that we're likely going to make a run to the 200-day at some point. We've got a trend line there we need to break. There's a ton of support. And then there's always, that somebody mentioned the last time I was on, there's always people who want to buy the dip, right? But looking at it from that perspective, going back to the dollar index, which is what I asked Mike to talk about, the weakness in the dollar is something I've been quoted as saying a lot, that I think the dollar is going to be strong in 2022 because I think the Fed is going to be perceived as being more aggressive. And the Fed has admitted their aggressive stance. We now have 4 Fed governors that are calling for a rate hike in March, saying they would support a rate hike in March. That's new. That's up from 1. And we have 4 that are still kind of on the fence. We're still waiting for some nominations from the Biden administration. And the dollar index is showing us 2 things. It's showing us that the market believes that the Fed it's going to work. Okay. So what do I mean by that? Well, what I mean by that is that inflation is going to calm down. And we already know we're going to get base effects on inflation. So what is base effects? Well, if price levels are here and they go to here, okay, this difference is the base to here. That's the plus you see in that plus 7%. But now as that rises and we only go from here to here, now we get a plus 1%. That's a base effect. That's still plus 1% on top of the previous plus 7. But it looks like inflation is calming down. And that's the number the Fed is looking at. We want to see inflation grow at that. We talked about that adjusted average, which is a silly term, of around 2%. All right. So plus 5 point something last month, plus 6.8 before that, plus 7 this month. Those are all year over year figures. Now, as we settle in at these higher levels, the base effect will make it seem like inflation growth has slowed. And it has. What the dollar is showing you here is the Fed is likely to pull back as time goes on, longer into the curve, as the rate of change of inflation slows. So that's a weaker dollar. The second thing, and the more important thing I think it's showing you here, is foreign money is not coming in to buy US assets. That's much more critical because the US stock market has been a safe haven. And that's when you potentially really see an adjustment of asset prices based off of what's been going on in equity markets. We actually saw a 1 or 2 tick pullback on belly of the curve yields today. I think the 10-year went down to about 170 from about 174 2 days ago. So we've seen a little bit of pullback in yields. So don't fall so in love with the idea that higher yields automatically mean stronger dollar. But look what's happening based off of what we talked about last week. We're right at that base level. So now we're at that level where you might see yields rebound and you could see the dollar rebound slightly with it. So that's really what I wanted to talk about, the dollar index. The yields can go up and the dollar can still be weaker. And that tells you almost definitively foreign money is not coming here to help support the stock market. That's what that would mean. Now, the last point I want to put on that, European countries are starting to seem much more casual about COVID than we are. I told you guys last time I was on, I'm COVID positive right now. I don't feel that bad. Now I'm positive I have Omicron because the way they describe Omicron as being like a mild cold or mild flu, that's how I feel. If I didn't have a confirmed positive test, I'd probably be at the gym today. But I want to give it that time because I live in Naples, Florida now. There's a lot of elderly people here. I don't really want to transmit it to anybody. So I'm going to stay in the house for a little while longer. I can't get a test. There's nothing you can get. You can't schedule them. There's no tests. So I'm just going to stay here till I feel 100% plus 3 to 5 days. Then I'll go back out. But yeah, that's what I want to talk about, the dollar index. I want to address something William S. just said there, Mikey.
Yeah.
Bobby, you look like you lost 10 racks. I'm 190 down from 203. So yes, I lost weight.
You're 190.
I'm 190.6 this morning.
Well, not that
That
you
was probably 203 last time we did a market think tank, right around
really.
203, 204. Yeah.
Huh.
But no, William, I feel great. I don't feel bad. I mean, I had a bad day, then I had an day. Today I feel fine. I'm not leaving the house simply because I don't want to harm anybody else. Otherwise, I would leave the house. I really would.
All right. What are your thoughts now with since we have you here, the continuation sell off? I mean, what are I mean, this was a pretty big reversal day. It reversed essentially the
So
last
if we
2 days of rallies.
Yeah, if we talk about the psychology that goes on behind charts, and this is one of the reasons Mike and I believe in charts so much, is because those repeatable patterns, that's market psychology taking place right in front of you, right? And when you see these big sell offs down 9.6% from the all time high in the NASDAQ, when you see these sell offs, a lot of the times these rallies back, these rallies that happen after a sell off, it gives people an opportunity that were worried about the market and didn't get out in that first sell off to get out at a better price than the lows that we saw 4 days ago. So that, at least in the short term, is what's going on right now as the psychology behind the market. There was a lot of like this, a lot of, whew, I can sell a little bit better. I didn't want to sell in the lows last week. And that's that selling pressure we see. So you have to see it stabilize from a technical perspective before you can get behind it. You asked me and Mike when I was on, when was that? Monday, Mikey?
Yeah, Monday.
Tuesday?
Tuesday.
Well,
It's
Monday
already
or Tuesday.
Thursday. Yeah, it's Tuesday and Thursday. Yep.
Somebody right away said, can we trust this rally? And we both said no. I'm on record as immediately saying, no, you can't trust this rally because you had to get above the rotation zone to turn to neutral. We did get above the rotation zone, and that put me neutral. This close below that significant level, that sideways channel that we got in the NASDAQ, puts me back to slightly bearish, to where I'd be looking more if you were going to buy for a sort of buy and hold position. I'd be looking at about the 200-day moving average, but Mike has more precise targets than that. So I would rely on Mike's technical. And then we also addressed, Mike, earnings season, which starts in earnest tomorrow with JP Morgan, Citi, and Wells Fargo. But we got Delta Airlines this morning, right? And if you remember what I talked about fundamentally, somebody asked what kind of an earnings season we needed to have to get the rally going again. And I said you wanted to watch the way a stock behaved after good earnings. So Delta, correct me if I'm wrong on this, Mike, slightly beat on EPS, slightly beat on revenue.
It estimate was 16 cents. Reported
I
was
think they were
22
22.
cents. So that was a
Yeah.
surprise, about nearly a 35% upside surprise. Revenue estimate was 9.02 billion. Reported was 9.47 billion. So that was like a 5% upside surprise.
Yeah.
And it did not close strong. It
Right.
rallied, but it
It
rolled over.
rallied strong and then did not close strong. That's what I meant. Okay. That's what I meant when I said you want to watch when a stock beats if the rally sustains. Now it can still sustain tomorrow. We failed, I believe, against the 200-day on Delta.
Yep. We
Yeah, you
failed
have it there,
exactly against
GAO.
the 200
So
day.
we failed against the 200-day moving average. That's not an unusual thing. It's a pretty flat moving average right now. It could be a regroup to move higher, but you want to watch how stocks like this perform after beating. And Delta guided very strong. They said they expect to return not only to profitability by March, but to very strong profits by March. And France, by the way, pulled back on their travel restrictions. They said with the UK, they said you no longer need a reason. You can just travel here. So again, European countries are starting to look at this as an endemic flu type of pandemic now, changing from pandemic to endemic flu. At least that's the way they're starting to talk. U.S. hasn't quite done that yet. But as you see that, I think you're going to want to look at the airlines. You're going to want to look, maybe not at cruise ships because you're trapped for too long, but you're going to want to look at things like Live Nation, which I recommended 2 years ago as a best stock over the next 5 years. You're going to want to look at stocks like that, stocks where it's like people getting together again, coming into the spring, and then see how those charts look. You always want to see how the charts look.
Yep. Christoph has a question. Where's money flowing when stocks and bonds sell off simultaneously for a while? Into cash?
Yeah, cash. We're seeing a little bit of a bit into gold, but not much. I
Not
mean,
much
gold today
today. I
was
mean,
down.
gold sold off too today.
Right, but we're back above 1800. It's certainly not. We're not seeing it in cryptos so much either.
Nope, it
So,
was it was
but
pretty red except for treasuries.
yeah, so that would be cash when we're
Uh,
seeing it go to treasuries like that.
Wavy asks, what do you guys make of the VIX closing over 20?
I mean, to me, the VIX is a little bit of an after the fact indicator. Mike, I don't know what you think. I mean, when we see the VIX going up, I'm putting a chart up here right now. That's
I
a
have the
pretty
chart up
simple.
on my screen, yeah.
Yeah, I mean, if you just look at the move that we had on the VIX, looks like that's the fifth, right? Pretty strong move, and then 5 down days after that. A lot of people look at 2020's kind of been the median level going back to like April of last year. I mean, I'm not saying an actual technical medium. I'm not doing statistical calculations here, but it's kind of been like the above and below fulcrum. I think unless you see a spike like we saw December, January, I wouldn't necessarily worry about the VIX. It's almost like the VIX is saying, hey, the market's selling off, and I can see it in the markets. When I was an institutional broker on the floor of the CME, our largest client, I was required to call him every day. And I called him up and just say, hey, we're looking lower here today. We're looking higher here today. It's going to be a loud day, blah, kind of unemployment. One day he looked at me and he didn't look at me. He was on the phone, but he yelled at me and he goes, Bobby, please call me with things that I can't see on my screen. That's kind of how I look at the VIX. When I see the stock market's going down, I look at the VIX, it's probably up.
I was actually surprised that the VIX did not move up more today. This was just a standard. Okay, we're having this move to me was more like okay, this was a run of the mill sell off instead of I mean we were down in the Nas 2.5%, and the VIX did not reflect that to me. So what this means to me is there's not yet the mad rush for uh like put premium yet.
Hmm.
We didn't have the December like kind of okay. You see how we started selling off at the end of November, and we had this huge gap in the VIX, and then we bounced back and forth above the 20, and we have a significant level right there. And then even this last little sell off where we bounced up and then came crushing down. This one didn't even get above on a closing. Well, I don't even know what the close was. It was right at this. Our significant level was 2031. We closed at 2030. So again, this wasn't what this is telling me is there was no panic yet. Now, so that's why also from a sell-off point of view, I would not be surprised if this continues. Because there's no like, okay, everybody rushes for the exits like at the worst time possible. And we didn't see that rush for the exits yet.
Yeah,
So
I would agree with that.
I again, and we're now coming back to this very key trend line in Nasdaq, and I didn't do a redraw yet of this, but you can see. Can you see the chart, Bob?
Yeah,
Yes. I mean, this is a trend line. Look how many touch points there are,
yeah,
and we broke below it with the last little sell off, and then closed back above it. But we're now approaching it again, and we're back
yeah.
down into this remnants of this advanced clear path. But then if we start dropping below my next key area is about 15,320. We start dropping below 15,320. Well, I'll be keying off a 15,160 area, which was right near the spike low from what day was that? The 10th of January. And then I'm just targeting this 200 because we're
Yeah.
also into this. We have another clear path move right
Hmm.
down here. So it doesn't even have to necessarily stop the 200. It could shoot beyond it easily and then bounce back above there.
I love when I see a level lined up with something so like powerful as a 200 day.
So yeah, it's pretty interesting. And from a weekly perspective, remember we closed below the rotation zone, which took it to neutral last week. We tried to bounce, but it just is rolling over.
Hmm.
Now the S&P, we came right down to the bottom of the weekly rotation zone, bounced up. But remember with the S&P, here's the 62 and a half. So the retracements from the high back on the 4th of January to this low on the 10th, when we put our retracements up there, the 62 and a half was just above where we closed. Now, once we get a close above that 62 and a half, I watch for a return to the high area. We did not get that yesterday, and today just rolled over. We returned to the area on a closing basis between the 50 and the 62, and that's where I always watch for these reversal moves. And we
By the way,
did.
we're getting. I'm sorry. Go ahead, Mike.
We got that major reversal move today, and we closed back below the 50 on 50-day exponential on the daily, which we couldn't even bounce above that into the close. So there is some pretty decent weakness. Now, what's interesting is we're back to this little run up retracement moves. We're back to the 50 to 62.5% of that. So tomorrow, my key closing level is about 46.36, 46.35. We can't get a close above that tomorrow, then I'm definitely watching in the S&P for a run back to this 45.72 lows.
Mm-hmm. I want to throw out there that tomorrow we've got retail sales.
Yep.
Kind of a big deal because this retail sales number is going to show you how much holiday spending was pulled forward because of supply chain issues. It could be a fairly disappointing number. And I'm not even sure that I'm going to know what that means if that's the case. I mean, the estimate is for unchanged month over month. X auto is up about 0.2. They're not looking for much.
They're
And in the past, yeah,
yeah, they're
excuse me.
calling for point 0.2.
Mhm.
Prior was point 0.3, or that was core retail sales was point 0.2, and prior was point 0.3. Retail sales month over month, they're only looking for zero or flat, and then
Yeah,
prior was
unchanged.
0.3%.
And if you see unchanged, I mean, that's not going to be good news, obviously. This is one of those numbers where people are kind of hoping it beats. That's just my view. I don't know. I don't have any even anecdotal evidence of that. I'm sitting here thinking, wow, that's a terrible holiday season, even if it's zero, right? Because then it was all pull forward and nothing else. So if that were to come in negative, that would be ugly. That could certainly be a trigger for a continued rollover. The just a forward price to earnings ratio. I see there's a QQQ question. Just a forward price to earning ratio I saw probably 4 or 5 days ago is about 35 or something on
I
the
said even below
QQQ.
above there, it's closer to 40 still.
All right, now closer to 40 now. I suspect there'll be a much better entry point for that in the first quarter for the QQQs. Seems like an easy thing to say right now as we start to roll over, but price to earnings that high, something's got to give, and in this case, probably price.
Yeah, and whenever you
But
have the inflation being this high above the 7%, I mean, that really affects PE ratios because
mhm,
it puts a lot of pressure on earnings too.
yeah,
Because just companies can only pass on so much. And you
mhm.
saw with the PPI today. I mean, it's even though it came in a little less than it came in a little less bad than they thought. But what was it? I mean, hold on. Like I don't even. I mean, that's insane. It came in a slightly less bad, but these are not good numbers. I mean, where were we with the PPI? See, everybody was celebrating the 0.2% increase versus zero point 0.4 estimated, but what was the year over year PPI, Bob?
Here, I got it right here. Year over year PPI today. Well, I just moved from it 8.8%.
Yeah, I mean, that's brutal.
Yeah.
I
Hold
mean,
on. Hold on. I just gave you China's. We don't
oh,
want China's. No, that was Japan's. What the hell am I looking at?
so,
Month over month PPI up 0.2. Year over year was 5.
oh, because it's
But that's
still
still brutal.
because that's only so much of that. I mean, the consumer can only absorb so much, and when you get all this consumer price inflation already, they can't keep passing on everything.
Yeah.
So it hits earnings. Now the Qs I could see easily, just like we talked about the Nasdaq, which the Qs are the ETF, the cubes. Uh, you could easily get back to this 365 area
Yeah,
easily.
I wanted to show people something real quick, Mike, in terms of what I mean by like base effects on inflation and stuff. The month over month, I'm not going to show it's not important to show it to you. You guys can find this at investing.com. Investing.com has a lot of good charts and they're free and you can just look at them. We exceeded the core PPI level, meaning so PPI is, or I'm sorry, CPI. CPI is an index, right? And over time, CPI is always going to go up because prices are always going to be higher than they were 10, 20 years ago. So it's always going to have an upward bias to it, right? Just prices of things rise as the dollar gets cheaper, which is forever. So the core CPI, the index, the thing that they track, the thing that went up 7% year over year last month in December, that thing exceeded pre pandemic levels about 6 months into the recovery. Okay, so we have been above, in terms of consumer prices, we've been above pre pandemic levels for coming up on a year. So prices have been a lot higher for a while now than what you've been used to seeing. First, it was store closing, so it was more money pushing into just a couple of places to buy things. So that's more money chasing fewer goods. Then things reopened, but people got back to work. So now it was more money chasing a larger amount of goods, but still more money, fewer goods because there was so much more money. Then it was stimulus checks. Then it was all these things. This is a generated inflation cycle that is going to slow on a rate of change basis, but you're still going to be paying a lot more. Example, chicken prices are up somewhere around 81% from where they were last year. Those aren't going to go down 81%. Okay, they might, dogs don't even like that idea of what stuff costs right now. You're looking at prices are going to stay elevated. They may come down from where they were, but they're not going back to where they were pre-pandemic anytime soon. So these are the kinds of things that harm the stock market, right? Is when economies understand that this is going on and aren't just watching the absolute level of the ES and the QQQs.
Christoph, can you pick at the RTY, the Russell, what is Russell 2000? So is he thinks it's going to smoke soon? Few small cap stops making actual any money, right? Actually, any money, right? I mean, I have on the RTY, we're about 21, 27. We're in triple bottom, almost quadruple bottom territory in the RTY. So you start breaking about this 21, 27, and it's been holding that since really about March of last year. So you get below that, and it's watch out below for me. Because you look at this on the weekly, you might have one minor stopping point at about 2060, but then look at this move.
Clear path.
There is clear. I mean, you could easily see the 200 week over a while. Uh, Benjamin, welcome. Thank you for being here. Question for Bob: companies with real earnings this time compared to the dot bomb era, but doesn't the current market look like March of 2000 irrational exuberance to the nth degree? Comparison to March
Yes.
2000, how's it similar and how's it different this time?
Okay, so it looks very similar. When you say companies have real earnings this time, you're right. Companies did then too, but you're seeing some of the same exaggerated valuations for something like a Lucid or a Rivian. Those are just the easy ones that come to mind. You're seeing IPOs are starting to fail, not do as well, but you're seeing SPACs start to wind down. The SPACs to me was similar to the profitless .com companies of 2000. I know Mike can speak to this as well. It looks very similar to March 2000. I'll tell you the key difference: Fed intervention. That's what's different now from then. And that's both a massive safety net and a massive negative. Because somebody in here asked another question about crypto or BTC as an inflation hedge. It
Wavy did.
relates to
Yep.
this. Yeah, it relates to this. Massive free money massive printing, whether it's digital or actual, um, that's where I believe in BTC. If inflation is driven by way too easy monetary policy, yes, I believe in BTC. And I'll tell you what I don't like about BTC, although I own Bitcoin and Ethereum, full disclosure. I own them both. I believe in BTC as an inflation hedge when the Fed is so involved, when they're printing money and allowing for all this easy money. If that's what's driving inflation, yes. Supply chain driven inflation, no, I don't think BTC helps. Wage spiral inflation, no, I don't think BTC helps. From a perspective of what's different now between March and 2000, again, it's the potential for immediate Fed involvement to try and cushion it. But that just means that the ultimate payoff of equity collapse, maybe 5, 10, 15, 20 years down the road, is going to be way, way worse than March of 2000 or 2001. The crash we saw in the 2000s will be nothing like what we see when this money printing comes due. I'm just not willing to predict when that is. Does that make sense?
And I'm going to just jump in. I would BTC would be a better hedge for me if you didn't have all these stuff going on with the stable coins. That's the Achilles heel right now of the crypto market. You have a bunch of funny money that's not properly backed, and if it is, some of it's backed, but with all this China real estate crap bonds that they won't disclose, and they've tried to print it when you all of a sudden over to on a mid morning Sunday you have $1 billion converted to Tether. No, just not happening. They do that to prop it up every once in a while, and there's so much wash trading and everything else that at the end of the day, that's the real Achilles heel. I agree that it could be a hedge, but you have a lot of concentrated wealth and funny money through the Tether stuff in there that if once Tether blows, it's going to affect the markets regardless of inflation, especially the cryptos. So that's my caveat with that. I've been a big proponent of the crypto markets, sane crypto markets, not all these crap coins. But the problem is now you have all these unregulated instruments like Tether that aren't truly backed, and there's so much manipulation going on. When that unwinds, it's going to be very painful. And I just have a bad feeling that all this is going to unwind very in short order. When you start getting real estate completely crapping out in China and other stuff with the junk. I mean, there's a lot of junk out there that people have used to sort of justify backing with complete junk again. So when that starts unraveling, it can really lead to sort of a rapid waterfall unwinding of things. So we've had the wacky Benjamin again, wacky market, GME, AMC, Hertz, NFTs, crypto, metaverse, 12-year-olds making money. I mean, when they're citing, I saw this like CNBC citing how to turn like $10,000 into $500,000. Like, oh, here, hand it to your 15-year-old and he can trade it like it's a video game. Okay,
I
where
gotta. I'm sorry, Mike. Go ahead.
I
I've
mean
got to add on to what you just said.
that's just insane.
Yeah. What I wanted to add to that was tether, the stable coin situation that Mike is referring to is almost a function of money printing as well. Because the more that the Fed prints dollars, the less value it has, the easier it is for somebody to believe that somebody like Tether could just accumulate these assets and it's just fine. Right? If the dollar had actual value, if we had actual regulators doing what they're supposed to do, if we had actual stable economic policy in this country and elsewhere, these Tether coins wouldn't be able to exist, which brings me to the thing that I don't like about Bitcoin and Ether, even though I own them, is they can be regulated away with the stroke of a pen, and it may happen with the stablecoin situation. That will regulate them to probably a 70% collapse in price. If the regulators actually say these stablecoins can't just say that. And I don't know how they do that. I'm not a regulator, but it goes to the easy money paradigm. And then similar to what Mike is talking about, where it's like turn $10 into 10 million. When I was on the trading floor, I need to think of a better name for the guy There was a guy, and his badge was actually the name. Remember American Gladiators?
Mm-hmm.
He had one of the American Gladiator names as his badge, right? I'm not going to say who he is because he was a good guy, but he was dumb as a bag of hammers. I'm telling you, he was just not bright. And he would run over to my trading desk and be like, "Can I use the phone real quick? I want to sell more Red Hat. And then I want to put a buy order in below. And then I want to sell it again in here. And I got to put these orders in before the market." He was making more money trading his individual stocks at my phone on my desk than he was making in the pit. And he'd come running back and forth. And I was like, I'm not doing this. I'm not taking part in this. But I saw him right in front of me making all this money. And I'm like, I know I'm smarter than him. Well, by 2002, 2003, it was proven I was smarter than him because he was not only bankrupt, but he was off the floor. And I saw him recently. He was a paint manager at Lowe's. Nothing wrong with that job. There's nothing wrong with that job. But this frenzy, as who was it, Wavy put it, as NFTs and cryptos and metaverse and all this stuff.
That was Benjamin, yeah.
It was Benjamin. Okay. You're right. That stuff happens all the time. Mike and I have seen probably 3 iterations of it. You're talking about one here. I'm talking about one in the 2000s. We've seen this before. And even with all our experience, it's aggravating watching people making so much money, what appears to be so easily. But I also used to see that in my old neighborhood with the guys who sold drugs in the west side of Chicago, and I didn't do that either. So the stuff ends bad. It always ends bad. And it is a game of hot potato wavy that no one wants to get caught holding the bag at the top. And I'm telling you, anyone that works with Mike and I, you're probably not going to be caught holding the bag. I can't guarantee it, but you're probably not going to be holding the bag at the top if you
Well,
pay
and that's
attention.
also why we analyze both sides of the market every day. So we're
Right.
prepared and we know where the stops are. We know where the downside price action is, whether it's the stock or the broad market. So we know we're prepared to take action. We're prepared, okay. The plane's going to crash. It's time to, we have the chute on. Now let's jump out and pull the cord. But it's not like sitting here. Why is the plane going down? I don't
No,
know.
I mean,
What
look,
should we
we're
do?
still on the plane with everybody else. We're
Yeah.
just wearing our shoes.
Exactly.
That's all.
That's being prepared. Amit, is there a possibility the Fed will let the air out, and when growth in the actual economy slows, they turn on QE game as they've always stepped every so often, QE one, two, three, etc. The question is, given all the price distortion due to QE, what's the actual value of all these assets? As many look at the various PS ratios, PE ratios, etc.
I mean, price to book is the actual value, I would say. But I would say you're right. I don't see the political courage to let the economy run and normalize. I really don't see it. So, yeah, I think they probably turn QE back on again. I really do. I don't know how you change that. Again, in Japan, it's been 30, 35 years of this. That's just a simple answer. I think you're right.
Benjamin says thank you. Amit says you should be on all the market overviews. I'm being yeah, I'm just going to be booted. I still just be the Bob. So where we now regarding the Chinese real estate market, it seems to be the authorities don't allow it to become an out of control crush.
That's a great question because China has a long runway for this stuff. Um, and they have huge coffers filled with US treasuries and with US dollars that they can fund a lot of this and sort of backstop a lot of this. So I would say that I don't know the answer to that. I mean, the Chinese real estate market, there's already been defaults. They saved the one larger company. There were some defaults on some smaller companies. There's now talk. See, we don't get the real news out of China. I have a friend at China Construction Bank, and he'll occasionally tell me which rumors we hear are accurate and which aren't. And one of the ones he told me that was accurate is that they're forcing people to move into some of these buildings. The government is at, and that's just the kind of like I don't know how to analyze that. You know, you're forcing people to move in. Are you paying for it for them? Are you making them pay for it? I don't know. So there's probably some stabilization. They've already announced stimulus. You saw their new yuan loans overnight fell more than expected. Small, very small number. Copper fell along with it. but they are committed to more stimulus. So I would say you're not going to see any major problems with the Chinese economy other than lower and lower, consistently lower GDP growth than we're used to. But I don't think you'll see any crashes there in the first two quarters. But I don't know where their pain point is. They've got huge coffers. I'll tell you what, if they go through a lot of pain, we're probably looking at a 5.5% 10-year year.
Let's see. Wavy, the Bob situation describes exactly how the company shall not be named.
Don't say the name.
Options have been trading over the last year. It was free money, ending weekly call and a big gap up. You could see 100% plus easy money.
You can't say the name.
Gen Z, unfortunately, will be left holding the bag. And Kathy, of course. Kathy from ARC. Or ARC. Oh, Kathy, there it goes, ARC. Couldn't it got back to the daily rotation zone, now rotating down again. This is going to just be a blood. ARC is going to be a massive bloodbath.
Yeah, it's going to be bad.
So this is going to, where's her 30 to 40% this next year?
It's going to be bad.
It's going to be 30 to 40% down.
Mm-hmm.
So trading is always supposed to be a predetermined if-then solution. Let's see. Going back to technicals, I came on the call late. We'll watch later. I know we were testing major trend line on NAS on Monday and rallied hard. Not good luck if we breach the 200. Well, NAS is still a decent off the 200, but I just talked about this trend line, and it might have been before you jumped on. This trend line right here that we bounced from on Monday. That was the 10th, right? I'm losing track of days already. There's been a lot of price action this week. Monday, Tuesday, Wednesday, Thursday. Yep. If we get back below it, this is a major trend line. I'm watching for that close below it, but a close below that will not be good. Then you should see the VIX start really taking off.
I suspect if we get below the 200, this is not a technical statement. This is what I suspect would happen is that if we get below the 200, we'll pop back above it. If we get below it the second time, that's when you can look for a little bit of extended pain, not necessarily even a bear market, just a market that doesn't recover as easily. It's that second time down that always hurts.
Bob, but seriously, can you trust anything the Chinese government says or claims they will do?
No, you can't trust anything our government says half the time. So why would I trust China's?
No, you can't. I mean, China's filters so much news and everything else, and they let out what they want to let out.
I'm vaccinated, COVID positive, just saying.
So yeah, I don't trust our government either. Wavy. Then we'll probably wrap this up because I have to get to a company that shall not be named. Wavy. A bit of a different question. I'll let you take this one while I just glance at the charts real quick, Bob. How did you and Bob meet?
Then I'll get off and let you do the run through the technicals. Mike was a member of a service I had years ago called Trader Outlook. He attended a live event we did at University of Illinois in Chicago. And during one of the breaks, he came up to me and he said, so I bought your system 2 days ago and I learned it and it's good, but I think I improved it. And I'm like, in 2 days? He goes, yep, just the way he does. Yes, with no change in his tone. And I said, well, let's have lunch. I want to see what you did. And after a few conversations, I realized he did improve it and he knew some of my own stuff better than me. So I asked him to join and we basically been partners ever since. That's really it.
So let's see. All right, Bob, going back to last call, is 15% the most we'll see this year in the indices, in your personal opinion? I guess that would be 15% up.
No, I mean the 15% drop is what I'm talking about.
The 15% drop, is that the most? Okay, because you just answered a question.
Yeah, I don't think it'll go much more than that. I don't think we'll have an extended bear market now, simply, again, because I believe the Fed will step in. So that's why I don't see it. And again, the second time's always the worst. If there's then another 15% down in like 2023 or 2024, that would be the one that I would be ugly. It would be very ugly. And yes, William, that's true.
You've been dating for, oh boy.
I won't propose.
What's the 15th year anniversary gift that you're going to get me?
Dog shit.
Yeah. See, this was a swearing-free pod or swearing-free stream until Bob comes on. You
Yeah, I'm
guys are
Italian.
legends. I dream to
It's
be
like
traders
people
like
love
you one
me.
day. Thank you for coming on, Bob. Yeah, well, just if you guys like Bob, you can keep asking him to come on. I mean, I don't have a problem with it.
All right, I'm gonna let you go do technicals because otherwise I'm gonna
I
keep
got
talking. I'm gonna go.
5 minutes of technicals to do, so thanks for popping on, Bob. We'll talk to you later. And let me just take a quick glance at the market so we're prepared for tomorrow. And with that, let me get back to, let's see here. Let's glance real quick at a couple things. Got to redo my cameras. There we go. All right. Well, there you go. You are welcome. If you want to stick around for a couple minutes, just let me look at the. So we already covered S&P. S&P here. Again, we couldn't get above that 62.5% yesterday. I was actually watching for a continued rally, and then we just rolled over after those numbers came out. It held up for a bit. You can see here, numbers came out, held up, and then market opened, and it was just cascading selling all the way down, only above my bullish line in the sand very, very briefly. Key area tomorrow, 46.35. Pay attention to that, especially on a closing basis. All right. Uh, Intermediate areas I'm watching about 46.30, then 46.18 to 46.14. Keep in mind, we start getting below this 46.35 even intraday. This we're already in a clear path, but another one starts below that. And this is an advanced clear path, so we could start seeing even more cascading moves down. What I'd pay attention to on the upside, your levels, my levels, the upside are about 46.77. I'll be watching for the first major level. And then back, we have the first cross of the 4 hour rotation zone back at 46.98. So 4,700 is now turned into major resistance again. But, you know, pay attention to, we have numbers coming out again first thing in the morning. Uh, let's see, it was, again, we have retail sales, so pay attention to those. Those are coming out at 8:30 Eastern, 7:30 Central. And we have bank earnings. Now, the bank earnings should be decent. So that's the one caveat. We could get some bank earnings, which are before the open tomorrow. But it's again what Bob said before, watch how they react. So if we start getting a rally on and then the broad market really starts opening and brings in selling pressure again, and things that did like Citibank, Wells Fargo, JPM, if they have strong earnings, but then they start rallying, but then roll over again, then again, watch out below. Pay very close attention to those. I'd be watching, if you want to add things to your rotation tomorrow, watch the banks, especially for the first hour of trading. NASDAQ again closed below. We only got up to the rotation zone. Nearly the first target on the head and shoulders, and that's done now, rolled back over. And this is the lowest close since back now, since October 20. October 25th. We're right about that level. So this has wiped out everything since October. Major key trend line roughly at about 15,450 tomorrow. So we start falling below that with selling pressure. I'm paying attention to about 15,335. Then I'm going just back to the lows from 15,150 area. And keep in mind, back down there, we have another clear path, and we're already with this. We hit in this clear path with the little bounce of the rotation zone. We're back in the clear path now, but we do have some support, especially around this 15,300. So pay attention to that. Dow, which held up the best. Dow, which held up the best. Now, let me bump this up. Again, we hit the first target. See, when you have a decent like pattern like this, double bottom, and it can only get to the first target and then it rolls over, it's never a good sign. So Dow, the major area I'm watching tomorrow is the 50-period exponential, which we have not closed below since back on the 20th of December in the last little sell-off. So that's coming in about 15,730, 740 area. Pay attention to that. we get below that, I'm watching for 35,321. Christopher asked that we'll have to deal with that tomorrow. I'm running out of time. Let's see, I was busy all day. What numbers is Mike referring to this morning? We had the PPI this morning. So CPI was yesterday, PPI is today, and then retail sales are tomorrow, and we then have a Fed speaker in the afternoon. But, this is, again, we talked about the VIX earlier. Still, there's no panic in it. So can this sell-off continue? I want to see if, for bottoms to come in, this is where I like these major spikes and then reversals. We haven't had a major spike yet. We actually had a major spike back on the 10th that then reversed, and that was that big reversal low. Compared to this, didn't even get above really this 2030 level. So if you want to watch something, if we start getting a sell-off and then the VIX starts really taking off, that's when you start watching it tomorrow. And then if it reverses, then pay attention to possibly a potential bounce. Other than that, if we start having major selling pressure, don't try to just be a hero and pick a bottom. So we'll wrap that up again in a few minutes. Company shall not be named. Yeah, leave some comments. If you want Bob keep coming back, put some comments, go back to when the stream is over and post it, both on Pure Exposure. You can look up Pure Exposure Media Group because I'm streaming this on multiple sites at once. Go leave some comments on YouTube because it gets wider circulation. We can get Bob on here more. Okay, his time's very valuable. He does, all the other TV spots, the CME, the TD Ameritrade. So he has to make time to do this, and he's glad to do it. But the more we can get this out there and the more participation we can get, the better it is. And then come back to also the Path Trading YouTube channel and leave comments, please. I really mean it. If you can do that, it will help a ton. With that, good luck tomorrow. I'll be, if there's any disaster happening, I'll be on Discord and I'll post anything that we didn't touch on tonight. If it's just trading as normal or we start rallying, there's not much for me to say, but I'll post anything that comes up. Talk to everyone later. Thank you, Daniel. Thank you, Chris. Thank you for being here. Let's see, NASDAQ potential double bottom on the 4-hour. I didn't even look at that. Hold on. Not yet. It's got more selling to do, Rich. It's got more selling to do. It's got to come down into this area. It's got to come down into this area again before we have a potential double. So, and then I'd have to really judge which side the targets would be from, but we'll take a look at that. If that becomes a potential double, we'll come to that. William, we'll have to look at Robinhood tomorrow. Thank you, Mike. Thank you, everyone. Talk to you later.